Hello, everybody, and welcome to this session on the European gas markets. And thank you for tearing yourself away from the excitement of the election to dial into this session. I've got two great speakers with me today, and we're really going to focus on both what the impact of the COVID pandemic has been on the European gas market, but probably more importantly, what it's going to be in the future. And related to that, we're also going to try and get into what our panelists think is the long-term future of the energy market and the role that gas plays in it. So I'm going to start just by asking our panelists to introduce themselves, and then we'll move on to their reflections on how the epidemic impacted the market over the course of the year. So Wayne and Gergely, if you just want to say a few words about who you are and the organisations you represent. So Wayne, if you want to start.
After you, Gergely.
All right.
Okay. Hi, yeah, I'm Wayne. It's Bryan here. I work for Refinitiv as Director of European Gas Research. I've been actually here since February. Prior to that, I worked for a private consultancy where I used to trade gas and power products out from day ahead right through to 3-4 years.
That's Wayne. Gergely?
Good morning, everyone. My name is Gergely Molnar. I'm a gas analyst within the Gas and Power Division of the International Energy Agency, mainly focusing on the European gas markets.
Thank you. So to start with, let's start with your reflections on how the pandemic's impacted the European markets during the course of the year, and if you think there's anything that comes out of that that indicates a particular direction going forward. So Gergely, as you're on screen at the moment, why don't we start with you?
Well, I think that when we look back at the first half of the year, it was really a perfect storm for the European gas and power markets. Even before the start of the lockdowns, European gas demand was quite under the weather due to mild winter temperature and particularly strong winds. So heating degree days across Europe's main gas consuming regions were down by approximately 5% year on year, which naturally weighed on residential and commercial gas demand, and wind power generation was up by over 1/3, which of course depressed gas to power demand. So even before the lockdowns, European gas demand was down by over 4%. And then the imposition of the lockdowns had a very significant impact on European gas consumption, which fell by over 11% or 10 BCM between early March and end of May. When we look at which sectors have been the most impacted, we see that it has been primarily the industrial and power sectors. For industry in the countries which have been imposing stricter type lockdown measures, such as France, Italy, Spain, we saw that it plummeted by over 15%, and electricity demand during the lockdown period was down by over 12%, which naturally weighed on gas-fired power generation, which was down by 20%. So I think that this was really what has pushed European gas consumption to 6% year on year. And then we started to see the first signs of demand recovery starting in June. And this trend sort of continued through the third quarter, when actually European gas demand started to grow and recovered 3% year on year, almost entirely driven by the power sector. And this has been due to a number of reasons. One has been the lower nuclear output in Northwest Europe, which was down by almost 1/5. And this has been really a combination of reasons here. It was due to fuel optimization, but also due to the expansion of nuclear outages, which has been delayed due to the COVID-19 outbreak, actually. So we have seen this happening, for instance, in France with the Flamanville 1 and 2 nuclear reactors. But we have also seen at the end of the summer, very significant drought in France and Belgium, which also drove down nuclear output. So all in all, this created additional market space for other sources of supplies, and most of that market space has been actually captured by gas-fired power generation, which became increasingly competitive versus coal and even lignite-fired power plants, due to a combination of very low gas prices and the sharp recovery in carbon prices from a low of around 15 euro per ton under the lockdowns to almost 30 euro in August.
Okay, Wayne, do you have anything to add on sort of the history? But now, as we're moving into winter, we're moving into lockdowns in some key territories. So, I guess, how did you see that demand playing through into price during the course of the year? And if you start to look forward through this season and into next year, then what's your outlook?
Well, I think on back of what Greg was saying there, in terms of the recovery in demand and prices, what we saw also we saw May up to 25 to 30 cancellations on a month of June, July, August, September. That also played into the recovery in price. But I think moving forward into this season and looking at our own in-house research, where we looked at the outcome for this winter, we were still a little bit bearish for the winter. Now, our initial findings, we sort of had a bit of COVID research, but even just without COVID, we still saw the market being very similar to the last few winters, conditions being mild, wet and windy. Increased nuclear, we mentioned nuclear, actually French nuclear for Q4, and even at the moment today it's about 43 gig, and it's actually forecast until the end of the year to be above the 3 to 4 year average. So that was also another bearish factor. Belgium availability was also higher, excellent strong Norwegian supply, robust Russian supply, and of course looking at the price economics, we saw a return of US LNG into Northwest Europe in November. Fast forward, we did our research at least a month or so, 2 months ago. Fast forward into now, and we're seeing some of them elements are still present, but what we are seeing now is perhaps the potential impact for further downside in demand as a fact of COVID. As we talked about earlier, we've seen Germany's gone into a sort of semi-lockdown, France has gone into a more or less total nationwide lockdown, and the UK from tomorrow is also going into a lockdown. So that for us is already going to exacerbate what we already saw as a reasonably weak market. Furthermore, you mentioned the coal-fired generation as well. Well, now we've seen actually TTF forwards are moving lower towards the bottom of the range, which might spur a bit more additional gas demand and put some of the more modern coal plants out of the money. But I think looking forward into next year as well, if we do have this sort of winter that we expected, and then we throw on top of that COVID, we could see prices start to fall further in the year. We still don't know what's happening with Nord Stream 2. Initially, we were talking about coming online in Q1. That looks very undoubtable. But we do have the TAP pipeline starting soon as well, which will draw additional Italian demand away from Northwest Europe. So really, for me, I'm still quite bearish. And I think COVID-19 now and the subsequent lockdowns and uncertainty for me is going to exacerbate the fall in demand. One thing I will say though, and it's something we've been looking into, residential demand actually, if we do experience a really cold spell, for me, it could be a bullish driver. What we observed at the start of October, we saw in in France, the Netherlands, the UK and Italy, when we had that short-term cold spell of about 10 to 12 days, we saw LDZ demand rise significantly above the 3-year average. Now that indicates to me, and obviously that I know, that occupancy rates in domestic residences are higher. So I was at home a couple of weeks ago, my heating was on all day. Obviously I'm normally in the office. And then people might say, what about the space heating, etc., in big industrial spaces? Wouldn't that offset it? But no, actually LDZ demand obviously is the biggest demand, especially here in the UK. So for me, that is also going to play into it. And industrial demand, of course, will fall. The hospitality sector, retail sector with stores closing, some manufacturing has been closed down or will be. And of course, mobility has been impacted as well in terms of transport. So I haven't really got many really bullish points for anyone really looking for a rise in the market. A lot of my outlook is quite bearish. However, I caveat that with, I mean, we're looking at a potential La Nina effect in Asia, which could translate into some cold spells in Europe. And if we have, for example, a polar vortex episode like we saw a couple of years ago for, say, a month or 2 weeks, the effect on gas demand would be quite high, and I would imagine prices would really start to react. And lastly, as well, the battle between Asia and Northwest Europe in terms of LNG as well will be key to sort of price movement over the coming months. But what we've seen in the last few weeks is US LNG is now coming back into Northwest Europe. About 3 cargoes are headed to the UK as we speak, and several more head into Northwest Europe. So we've got a bit more confidence that the export economics are now in the favor of US producers sending cargoes back to Northwest Europe.
Okay, you preempted a question I was going to ask you about, where you think Europe is as its sort of traditional balancing market for LNG, and obviously you think it's coming back. I mean, last year, of course, the last couple of years, we have had a few sticky patches with gas being pinched in certain markets when we've had cold spells, etc. Do you see a possibility of that this winter? And are there any particular markets you think are more or less vulnerable?
I don't see that being as bad as last winter. And if you look at storages as well, they're still very, very, very ample across Northwest Europe. And we do have as well a lot of storages in Ukraine. A lot of players started moving gas volumes into Ukraine over the summer period, incentivized by their customs-free regime, which allows you to store gas for up to 3 years. However, looking at the current price, next winter actually is priced above this winter, so players might not be incentivized to withdraw that storage as much. But I think in terms of some of the related markets, I think the addition of the TAP pipeline is going to draw some Italian demand away from Northwest Europe.
Right, okay. If we move on to the medium outlook, we already heard that wind power was one of the factors that was depressing demand earlier on in the year. Gergely, I mean, we hear so much about energy transition, and I guess I've got the question of, where do you see gas in the medium term? So say 1 to 5 years, or even longer, in the European market, and looking out in the longer term, if you look at a primarily renewable network, then who gets to play the role of sort of the base load for intermittency? Is it nuclear? Is it battery? Is it gas? What do you think could drive it one way or the other? And you're on mute, I'll say, before you start speaking.
Well, and I think that we all need to acknowledge that the European power sector is undergoing a profound transformation, and it is something which has been already starting, since 2014, for instance, in Northwest Europe, coal-fired power generation halved, and during the same period, variable renewables, wind, solar doubled, and today they account for about 1/5 of our power mix in Northwest Europe. And during the same 5 years, gas-fired power generation has been growing by over 1/3, mainly at the expense of coal and lignite-fired power generation. So when we look at sort of the medium term, let's say the next 5 years, we sort of see the acceleration of that process. So we estimate that about 100 gigawatts of coal, lignite, and nuclear fired capacity will be closed in Europe in the medium term. And this includes, of course, the nuclear phase out in Germany, taking off about 8 gigawatts by 2022, the phase-out plan in Belgium, translating into a reduction of 6 gigawatts by 2025, and additional plant closures in the UK and Sweden. And when it comes to the coal phase-out, the list is even longer. We have 16 out of 27 EU member states aiming to have phasing out coal, altogether about 75 gigawatts in the medium term. So this is obviously creating some market space for gas-fired power generation, but at the same time we also see that the strong growth in variable renewables, about an expansion of about 40%, is sort of going to cap that market space.
Mm-hmm.
So I think that we see that in terms of absolute volumes, gas to power demand is going to recover close to its pre-crisis levels in the next couple of years, but then in sort of the second half of the medium term, it is going to be increasingly depressed by the expansion of variable renewables. What I think is much more interesting to see is that how the profile of gas-fired power generation is changing and is set to change in the medium term. So we see that it is increasingly becoming the sort of flexibility provider for increasingly renewable-rich power system. So just a good example, a couple of weeks ago in the UK, there have been wind, and there was not much wind, and during that week, gas-fired power generation provided about 50% of the UK electricity needs. So we see that trend to continue in the future. We have just issued report focusing on electricity supply security. Where we did some simulations on how the role of gas-fired power generation might evolve in the next 10 years. And what we see is that by 2030, in a peak day, the call upon gas-fired power generation could be about 86% higher than in 2018. Now, this obviously means that the link between electricity supply security and gas deliverability is going to be increasingly important, which means that investments and interest in gas supply flexibility should be also not overlooked when we are looking at the overall energy system security.
Okay. On that subject, if you see gas becoming more of a, sort of being used more as a flexibility prop to basically keep generation going in a predominantly renewable system, are the market mechanisms that we have at the moment suitable for that? Is there an appropriate premium attached to flexibility to motivate people to maintain gas-fired capacity, or do we need to see some changes there? And then I think going on from that, as we come out of the pandemic, then obviously we are going to see a lot of stimulus spending from governments, and the EU in particular is majoring on its Green Deal. I'm interested in your views on what kind of impact you think that will have on the gas markets, particularly in the medium term. So Wayne, if we start that with you, and particularly given your your previous exposure to the day-to-day realities of being a market participant, then do you think the current market structures are sustainable with a new shape of sort of power and electricity markets in Europe, or do you think there'll need to be some tweaks from governments in terms of what people get paid for?
Well, I do agree with you there, and I do think there will need to be some tweaks moving forward. And going on what Greg was talking about in terms of the renewable, for the UK, it's still the case that gas is still very important in terms of providing that part of the mix. For example, in the UK, just a couple of days ago, we saw wind speeds around 13, 14 gig of wind, gas demand really fallen. Whereas you look at today, wind speeds have fallen dramatically. We've got about 6 gig online in the UK, and CCGT now has ramped up to around 55%. So I think that we'll need that still in the short term. I think in terms of tweaks to the actual market, I think there might need to be some changes, and I think especially with the strong growth in renewables over the coming or the medium term outlook, I think we will need to make some changes, and even change sort of the way, well, when I used to trade, sort of change the way I would go about actually trading on a day-to-day basis, because now wind speeds or renewables can be quite intermittent and more unreliable. Moving forward, I think that's going to change. And once you get a lot more capacity online, once that intermittency starts to fall, I think you'll see, as Greg was saying as well, gas demand will start to fall, and I think the market will need to adjust to that as well. So yeah, I do agree with you in that respect.
On sort of what you might see out of the European Green Deal, do you think that has an impact that people need to start thinking about now, or is it too far down the track or too uncertain?
For me, for me, it's a bit too far down the line, but those who participate, that part of the market, might start looking at future investments as a result of this, the latest potential tweaks to the Green Deal. So, but for me personally, looking out that far, I don't think now would be for me the time to start looking at it.
Okay, Gergely, I mean, what's the IEA thinking on where the Green Deal might go and what the impact might be?
So in our team, we are looking at the medium term. So to be honest, some of the impacts of it are a bit beyond our sort of 5-year window. But I think that what we need to acknowledge is that the European gas industry needs to reinvent itself, and this reinvention has to really start as soon as possible. So I think last year, for instance, in the Netherlands, and in between the two sessions, the first session was dedicated to natural gas, and the second session dedicated to hydrogen. And in between, the crowd was singing a song, there is life after death. And I think this is gas industry. We need to find ways to accommodate more cleaner molecules in the European gas system, and it has to be, a variety of clean molecules, including biomethane, hydrogen, CCUS, combined traditional gas. And this is, so to be part of the solution, the gas industry needs to make those efforts. And when we are looking also at more the global landscape, we have seen recently that there is an increasing interest in carbon neutral or carbon offset LNG cargoes, which again points into the direction that there is an increasing interest in having molecules which has a lower carbon footprint. And if we look at the more medium term, we think that the EU methane strategy, which has been adopted, published a couple of weeks ago, and it is going to be followed up by legislative measures which might incorporate emission standards. And to that, obviously, the main players targeting the European market will need to adopt themselves through the medium term. So And I think that those are the main focus points on that question.
Okay. You mentioned hydrogen there, and there's been some attempts to start putting some hydrogen into the mix, but obviously the infrastructure is quite limited in terms of what it can take. How long realistically do you think it's going to be before we start to see, well, will we ever see hydrogen really as a significant part of the gas mix? What are the practical problems in terms of actually changing the infrastructure to make it work? And is that a 10 to 15 year timescale, or is that is that 5 to 10 year timescale, or is it never timescale? I'm just interested. I know this is probably more of an engineering question, but I'm just interested in whether you even hear people talking about it, or if it's one of those things that is out there on the horizon, but it doesn't really impinge on day to day at the moment. So Wayne, I don't know if you've got any views on that. I mean, it's quite a long-term thing.
Yeah, in terms of that, I mean, even in my previous role, we never looked out that long term. And here now at Refinitiv, the most we look out is 6 months in terms of our outlook. We look on a seasonal basis. However, there is a lot of talk about hydrogen, but I mean, maybe Greg is more informed than.
Okay, Greg.
No, so hydrogen is definitely beyond the 6 months horizon. It will take some time, some effort, some additional stimulus to develop hydrogen production in Europe. And I think that we see different streams here. One, Andy, you mentioned the question of blending. Indeed, we see that there is limitations in terms of how many percentage of hydrogen volume can the gas infrastructure accommodate. We see some, variability in the European gas infrastructure, but usually it is in the range of 5 to 10% for the gas transmission infrastructure. When it comes to the gas distribution pipelines, which are usually polymer based, we see a much better acceptance for hydrogen. So I think that there is also a very important question related to how much hydrogen can be accepted by the storage facilities, because one market niche where we see a potential role for hydrogen is really to provide this kind of seasonal balance, which at the moment is very much provided by natural gas. At the same time, we see that depleted fields and aquifers are not very well suited to hydrogen. So salt cavities has a better acceptance range. At the same time, we also need to note that only about 20% of the European storage stock is salt cavities. So if really we are aiming to use hydrogen to provide that seasonal balance, probably that there is a need to invest and to develop more salt cavities. One interesting point is that we are having a major phase out in Europe in terms of the L gas in Northwest Europe. So there is also some talk about that the L gas pipelines, which are used to export L gas from the Netherlands, for instance, to Germany or to Belgium, would be, the first pieces of traditional gas infrastructure which could be refurbished into hydrogen pipelines. But maybe just one note on that is that when it comes to really developing a hydrogen industry in Europe, the bulk of the costs are not really related to infrastructure. It is much more, to the production of clean hydrogen itself. So to develop all the renewable assets and also the electrolyzers, where we have seen some some cost reduction, but there is still a long road to go to make it competitive.
Yeah, I saw a statistic yesterday that if somebody wanted to use hydrogen as their sole source of energy, it would actually cost them the average entire wage packet to do so. So I think there's still some way to go when it comes to economics around hydrogen. Moving back to sort of the market as it is today, a couple of points you made earlier, Wayne. I just want to get some more thoughts on. So one is LNG and how much of a role you see LNG playing in Europe going forwards. Obviously, the European market used to be really important for LNG, but now it's pretty much a backwater compared to the Asian markets for the big exporters. So I'm just interested in, do you think we'll ever use all that capacity that once was built, or is it kind of going to be a fairly minimal part of the mix going forwards? And do you see LNG pricing evolving to make it more important or more competitive? And then the other point was on another point you made about heating, and heating doesn't get talked about so much as power generation, but there's a lot of very sticky heating gas demand, and do you see that going anywhere? So, but if we just your thoughts on LNG first.
In terms of LNG, it's not going to be as important. I still think at the moment it's very important. And in terms of price movement, we saw that this summer. The energy or the gas market, European gas markets were drifting. TTF was single digits. We saw prices were really the price differentials. We saw the impact straight away was the prices straight up. It will continue to be important, well, I'm going to say continue for at least the next couple of years. It's still going to be an important part of the mix. We still need US molecules especially are still important for Europe and Asia. And I think looking at the way the market is now, this winter, for example, the expectations of US LNG arrivals into Northwest Europe form part of many people's focus in terms of where the prices will be. If we were to see a lot of these cargoes start diverting to Asia, whether that's demand related, La Nina, whether weather, several different reasons, then we will see the European market start to rise.
Okay.
So that tells you how important it still is. And people still ask, we get a lot of questions around the LNG market. Where do we see imports? Where's this cargo going? So no, for me at the moment, it's still very important, especially when it comes to the pricing aspect of the market. Okay,
that's helpful. And I just see we had a question in on the role of gas in decarbonisation. I think it had already been talked about to an extent in terms of coal being removed from the market and gas coming in and replacing it. Do you think that makes gas more durable in the medium term? That it's obviously lower carbon than coal, although it's obviously higher carbon than renewables, or is it very much a bridging fuel in your mind that until there's a fully renewable system?
From me, from my side anyway, and again, I mentioned I don't look out this far into the future, but just for me, I still believe that gas still has an important part to play. And when you say fully renewables are still going to be intermittent. The share might grow, but you'll still need that. And gas is a reliable baseload generation. It's been proven, and it will continue for me to be proven. I'm like a defender of the gas industry here.
You're probably playing to the right crowd. So,
but I still think, when people ask me that, I get asked the question quite a lot. I still believe gas, surely it still has an important part to play, like Greg alluded to. And 50% of generation in some countries when the wind isn't blowing, sometimes even higher. For me, it's still, I sound quite animated, but for me, it's still got an important part to play. And in terms of how the LNG market might change, I think it already is changing. Some countries are moving away from these long-term contracts, so it's going to be a more spot market-based market, which again will increase the competitiveness of it. Some of the longer term projects, I think some of the FIDs might be slightly delayed now because of the uncertainty created by the pandemic, which apart from Qatar, of course, who are going full steam ahead with their plans to increase regasification. I think they've got 100 ships on order or being built at the moment. So for me, LNG in terms of looking forward, I think it's still got, there's still going to be new capacity coming online. We're still going to need to use the gas. But the key thing, as ever, is demand. Where will demand be? That will always be the key driver. We don't know how life's going to change moving forward now after in the midst of this pandemic, and moving forward, are people going to change the way they live their lives? I mean, I'm not traveling as much. I'm sure most of you here are the same. I used to travel probably 17, 18 countries. So I think, I still think, just I went on a bit of a tangent, but I still think that some of these investments will still go ahead, but there will be now a slight stepping back and maybe having a look at the bigger picture before committing further.
Yeah, just briefly on demand, I alluded to it earlier. On the liquid side of hydrocarbons, we've seen some fairly big changes, not only in aggregate demand, but in also the shape of demand in terms of what people are using petroleum products for. When we come to gas, as I said earlier, the part of demand that probably gets talked about least is heating demand, particularly domestic heating demand. You talked earlier a little bit about where that might go this winter, but you can just sort of talk about that a bit more, and also in terms of how sticky you think that demand is, because we're seeing here in the UK certain conversations about what's practically involved in changing that to another form of heating, in terms of just how many boilers have got to be replaced and how much more expensive the alternatives are. So, I'm just interested in your views on sort of heating, and is there a realistic change in the short term? And I'm also interested, Gergely, in your views on that. So Wayne,
I'll try and keep it. I see
we're coming up on time.
Yeah, for me, it's really interesting part at the moment, especially with the COVID developments, in terms of, especially in the UK, where the majority of the heating, as you mentioned, is gas-fired. I've actually got a meeting with National Grid to talk about that actually next week. And I think, and I don't say I want to see it, but I'd be really interested to see if we do get 2 weeks of absolutely, -10, crazy cold weather, how that would impact the LDZ. Could we get a margin notice issued? If we were all at home, I think occupancy rates are probably about 60% higher at the moment in domestic residences. Now, if we're all at home all them days, say 7, 8, 9, 10 hours a day, heating's on, that's replicated across the country, I think we could see some record demand numbers. And that's why I think, speaking to the National Grid next week, I want to get an idea of what they're thinking and what they're saying. But I think it's really, really interesting, and it shouldn't be underestimated. And the numbers back it up from October, I think the 3rd to the 18th, in Italy, in the UK, and in France as well, where you saw this LDZ demand a lot higher than the 3-year average.
Okay, we are.
The last question was?
I guess we're coming up to time now, so I was going to ask both of you, what do you think will be the biggest thing that impacts demand in the next 5 years in Europe for gas? I'll start with you, Gergely, and then finish with Wayne.
I think that when it comes to, the overall gas demand in Europe, the key issue is going to be how fast we are going to recover from the current crisis. And we developed a number of scenarios around this topic, and I think that the key question is, are we entering now a delayed recovery scenario, or we are going to have a more sort of rebound recovery, and it is unfortunately becoming increasingly likely that we are entering the delayed recovery. scenario these days, which obviously is going to have impacts on the medium term of gas demand.
Okay, Wayne, your view?
Yeah, I kind of agree with Greg. I think for me, it's just the uncertainty at the moment makes things a lot harder to sort of forecast and envisage what's going to happen. But I think over the next 5 years, we've mentioned renewables. I still think that's going to have a big impact. How much renewables can we get? How big can the capacity be? That will have the impact on the gas, and how we'll be living in the next few years in terms of the demand side as well, which can have effects on investment. So for me, I think the demand side of it is a concern. And I think over the next year or so, we'll start to get a better picture of what a sort of post-COVID or even a pandemic, post-pandemic life will look like.
Right.
How have habits changed? So for me, I think in the next year, we'll be in a very good position to sort of ascertain exactly where we're going to go for the medium term. But I kind of agree with Greg with the rest of it.
Okay. Yeah, we're living in uncertain times. I think we all crave uncertainty that I think we're not going to see for a little while yet. I think that brings us to the end of this session. So thank you everybody for sharing 40 minutes with you. Thank you to the panelists for sharing their thoughts. And I hope everybody enjoys the rest of the day.